Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold.
ICE Brent crude oil futures. A fifth bearish black crow yesterday as the market dipped down to test the 50% Fibonacci line of the April 2021 to March 22 move at 77.54. The market's actions have expanded the April to May based bear channel into an April to date based bearish expanding wedge pattern, with the trend lines highlighted in dark blue on my daily chart, and they're currently at 83.91 to 75.58. Overall, in very early May, the market broke down below this bright red highlighted December 2023 to late April 2024 lower bull channel line, and this gave some potentials below for this pattern. And thus we have had a primary target X in the 78 even zone for secondary hard to reach target X2 down in the 72.30 zone. There is one other pattern I'd like to discuss, and that is the mid-March to end of April head and shoulders top with the purple neckline currently at 86.87. We'd previously reached the primary target in the 82.63 zone, but it was only on Monday this week that prices moved down to the hard to reach secondary target X1 down in the 79.41. Now I forgot to mention also that we already reached the primary target 78 even for the bull channel, the bright red bull channel already. So far today, a slightly lower open below the 50% Fibonacci line at 77.54, but then a move back up through the 50% Fibonacci line, but not stabilizing over or under it as yet. It's just not stabilizing yet, just playing with it. Spot gold, a counter to the counter bearish double yesterday. That was also possibly day 3 in a 3-day stick sandwich pattern, a pattern that is usually seen as a bearish one. The base of the action on a closing basis was the green highlighted short medium moving average currently at 23.25, as well as I suppose the lesser projected Fibonacci line at 23.26. Whilst one can argue the top side was still capped by the highs of last week and the breached dark blue lower time currently at 23.65 of the mid-March to very early April bullish shift pitch hook. Further down is the 50% projected Fibonacci line at 23.01 for the same bullish shift pitch hook. They're all back down there at those levels, aren't they? Overall, the market is still in between the overhead middle time, currently at 24.56, and the lower time below, currently 22.83, of the bright red highlighted early October 2023 to mid-February 2024 bullish Andrews pitch hook. Now, okay, so in recent days, I had looked at the action since mid-March as a possible bullish halfway hesitation, and we might still be in the process of forming the second leg of this pattern, giving a potential topside target up in the 25.40 area, well up off the top of my daily chart. However, I am mindful of the declines last week and again yesterday, and this possible bullish halfway hesitation may instead end up being a double top or some other bearish pattern. So whilst I keep the bullish halfway hesitation idea front and center for now, I can see the alternatives just in case. Would also add that the action over the last 3 weeks since the all-time high in May at 24.50, that just might be forming a possible bear flag pattern. We should know more within a few days one way or another, so keep an eye and watch out for false breaks. So far today, a reactionary move back up from the open and based on the bright green short medium moving average, but it's not really got that far.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.